Hey guys, welcome to this short trade recap. This is about a trade that I took in New York kill zone on EURUSD the 3rd of March. Yes. So it'll be a quick one, so bear with me. I will make it very simplistic so you will understand it. Let's go to the 5-minute chart. Okay, so here we got the Asian session. This is the Asian low, and this is some low created in Asian session, and then price travels higher, taking out the Asian session, etc. It's not important right now. So when London kill zone starts, we have this high, taking out these highs, then price travels down, induce some buyers, get up in the OTE of this swing, travels down further, taking out these relative equal lows. That's important. The move that took these lows out started in London kill zone. Yeah. Then London kill zone ends and lunch break starts. Let's go to the 1 minute. So because this is a liquidity grab, this could be a protected low. Yeah. So price travels away from it, takes out this high. Why this high? Because when price dropped down in the ending of London kill zone and it took these lows, people were thinking, this is a structure break. This is a break of structure. That's smart money concept things, you know. This is just a smart money order block. So I'm expecting when price get ups in these areas, they're inducing. Yeah. Price induces sellers because they think, break of structure, structure break, price comes back. In my order block, you see here, price has trouble going higher. This gives the time for retail traders to see this order block. Well, they're selling. Then price travels higher. Once again, it drops a bit. Inducement. It goes higher again. Drops a bit. Inducement. And then it takes this high. So smart money concept traders or retailers are putting their, let's say, their entry over here. It targets this low or even further. Stop loss above the high. You know the drill. They get taken out. So in this time frame, I'm not trading. I'm not looking for trades. Sometimes I do, but in this case I wasn't looking for a trade. So I waited. Price took this high, goes down and until this point. Then it reverses again. This is my swing. Price goes up, goes down a bit, creates this high above the 50%, but it's not in the kill zone yet. So let's play it through. So what do we got? All right, we have this New York kill zone open. If I want to be a buyer, I want to buy below the New York kill zone. If I want to be a seller, I want to sell above the New York kill zone open. So in this case, price took these smart money concept retail traders out and then starts to move down to whatever targets. Okay? So first we have a liquidity grab and we need to take these traders out to get some fuel for the down movements, if you understand what I mean. All right. So we have this swing. We have the 50%. The price steps into the 50%, but it's before New York kill zone, so we don't want to trade that. I will mark this high. Above this high, we still got the OTE untouched, the optimal trade entry. But I'm waiting. All right, so price The New York kill zone starts, price goes above the New York kill zone open, takes out this high, comes into our optimal trade entry. Alright, closes below, perfect, then moves away. Let's see. Great. This is perfect. This is like a displacement to the downside. You can see the difference here. You see this choppiness up and down, going higher, and you see this clean movement down. This is our displacement. Alright, let's wait. Here it breaks this low. Perfect. This is our market shift. Now I'm going to look for an entry. First of all, let's confirm the swing. Right here. I'm measuring again the premium and discount. Here is the 50%. Alright, I'm looking around the 50% and I see this breaker block. Great. I'm interested in the breaker block. Let me put up an order here. Stop loss go for, it depends on my target. So why am I aiming for this low and not this low? Because when price does a liquidity grab, that low is often protected. So I'm looking for lows above this low, basically. So this is a low above this low. That's what I'm targeting. Plus, price can bounce off the rejection block, resting in here on the higher time frame. Let me show you real quick. On the 5 minute, this is our rejection block. The rejection block is basically the wick that took liquidity, and yeah, that's basically it. All right, so this is my target. Let me see, it's 10.2 pips. Perfect. I want to risk to reward ratio of 3. Oh my god. Like that. Let me play it through. Taps us in. All right. Okay, perfect. This is what I want to see. Oh, all right, yes. This is what I want to see. Price tapping into the breaker block, closing below. If price breaks above the breaker block, it's not valid anymore. And I will be careful with the trade. So I will probably close it or, do something. So this is key. I want to zoom in because on my story I shared why I was 99% sure price would go to my target, and this is why. We have this low here. This low that made the market shift. I extend it out. First of all, you see some candles closing on the line and reacting off it. That's the first thing I noticed. The second thing, let me play it through. Okay, so here we see some pressure for price to go up again. And I'm thinking, okay, so we are getting a retracement right now. And that retracement can go up to here. Or, let me pull the VIP. The 50%. And this one is important as well. Let me show you. So price comes up. Wait a second. I'm mad confused now. Do I have the right chart in front of me? I don't think I have the right chart in front of me. I will check the other chart in a minute. But see how these bodies close on this line. the same as it does here. And if I see such move down, I know price has to come down. It has to, because the algorithm is moving in a certain way, and sometimes it respects. It's pretty new for me as well, but as soon as you start paper trading in this way, and you are looking at these kind of things, like for example, okay, we got this low and I see it respect here. I see price reacting of it. I see price coming towards this low. It doesn't always come there to the pip, but you see it coming here, reacts to it, breaks through it. And when I see these things, it's a learning process for me as well. But go to your charts and find these kind of things. Paper trade it, tape read it. In the live markets, it's very important. And you will get very familiar with these patterns, these algorithmic patterns. So yeah, okay, let me play through. Of course, it goes to my target. One sec, I will put up my other chart. Okay, so it was actually this chart. I hate it when the different providers come with different charts, but you see this low and you see how price on the wick taps it. The next one is trading through it, but it closes below, obviously. But you have to understand that if there is an algorithm behind the financial market, they can't always do this on the pips and then move away. They need to roll over, otherwise it's too obvious. Do you know what I mean? And the second thing, I measured the 50% of the swing, and see here, 1.06097. And the closure of this body is 1.06097. The open is obviously the same, and then it travels away. And that's when I knew the algorithm is supporting my ID, basically. I just wanted to show you guys this because it's pretty insane, and it happens more often than you think. Because if we look at only this is the New York midnight open line. Look at this. Here the wick taps the open, trades away. It comes back, trades through, but see this wick again on the open. See this closure on the open. The open on the open of this body on the open. Here again. It's fucking crazy how accurate it sometimes is. For example, here if price closes below and respects it like this, you can look for sells. In this case it goes up again, but it does the same. So when it travels higher and it's breaking this structure, for example, and we put out the VIP, you see this fucking 70.5% area gets hit, and then it moves away. It comes back again to the open, goes higher. Yeah, it's fucking crazy. So I want to thank you guys for watching this quick video. I think it wasn't quick at all, because eventually the video will still be like 50 minutes long. But yeah, thank you for watching, guys.